Hello my friends, my name is Dan Junior FX and today I'm teaching you about order block. Please, before I start, subscribe my YouTube channel, okay? Let's continue. Let's identify a simple definition of the words order block, okay? Order block, these are price zone where big institutions like banks, hedge funds, okay, place their buys or sell orders, okay? And also traders use these order blocks to identify potential reversal points or continuation areas, okay? And also we have two types of order blocks, okay? We have a bullish order block and we have a bearish order block. And also we have different types of order block. I'll talk about that one, which is valid order block, invalid order block, mitigated and unmitigated order block. Okay, it usually forms before a major market move, showing where liquidity was collected and where the smart money entered the market. Okay, so let's start with a bullish order block. As you can see, this is the last bearish candle before a strong move. That's how we mark. Okay, we mark the last candlestick before a strong move, before this a strong body move. Okay, and then we wait institutional at least to push this price to come here, and then we enter our buys. Okay, let's look at bearish order block. It's just opposite of a bullish order block. As you can see, this is the last bullish candlestick. Okay, we mark the last bullish candlestick before a strong move down, and then we wait institutional to push this price to move up, and then we enter our sell. It's simple as that. Okay, let's start with a valid order block. Okay, what is this valid order block? Okay, valid order block is the last opposite candle before a strong move. Okay, as you can see here guys, this was a red candlestick. Okay, so we mark this red candlestick before this strong body, before this strong move, and as you can see there's a gap somewhere here, so we should wait institutional at least to push this price to move down to fill this gap, and then we enter our buy, okay, from above this zone. Okay, so let's look at the key points. Okay, so it shows clear institutional order flow, as you can see here, because there's a gap somewhere here. Okay, and also it's often swept liquidity before moving. Okay, so this area where I'm waiting institutional to sweep liquidity below this candlestick, okay, before it move up. Okay, and again it must break a key levels. Okay, let's look number 2, invalid order block. What is this invalid order block? Guys, invalid order block is just opposite of valid order block. Okay, so this one that failed to break structure. Okay, and also as you can see here guys, okay, we mark well our box, okay, our zone. Okay, so these are strong body, but problem is that these are red candlestick has already touched this box with a wick, okay, which shows us there is no gap, which shows that institutional, instead of moving down to this zone, it will start moving upward. Don't worry, I will show you in the real chart how it work, okay, and how it look. Okay, so let's look at the key points. Okay, so weak reaction or no reaction at all. Okay, it might form a weak or it might not form a weak reaction. Okay, so price may consolidate instead of moving impulsively. Okay, so most of the time what will happen when there's an invalid order block, instead of price to move down, price will start consolidating. Okay, and also institutional likely did not place significant orders there. Okay, so these are good examples of invalid order block. I'll show you in the real chart. Don't worry about that one because there's no gap. Okay, this week has already touched this our zone, this box. Okay, so no need of waiting. Okay, number 3, we have unmitigated order block. What is this unmitigated order block? Unmitigated order block is a valid order block that has not yet been retested by the price. Okay, so this is where we wait institutional to push price down to fill this gap. Okay, as you can see here, these are valid order block. Okay, so the problem is that institutional push this price up and then later it's moved down before touching our zone again, it started moving up. Okay, so we are waiting in future institutional at least to push this price to come down to fill this gap, and then we enter our buy from here. And again, I'm expecting price to sweep liquidity below this wick, below this candlestick, as you can see here. Okay, and then we enter our buy orders from above this zone. Okay, so let's look at key points. Okay, orders from institutional are still waiting. Okay, as you can see, because there's no still price did not move down. Okay, and there's a gap here, so we are waiting at least institutional to fill this gap. Okay, and also there's a high probability setup for future entries. Okay, and also price usually come back later to fill those gaps, okay, or those orders, maybe after 2 days, maybe after 1 week. Okay, so let's look at number 4 at mitigated order block. Okay, mitigated order block is just opposite of unmitigated order block. Okay, so these are order block where price has already returned. Okay, as you can see here, let's look at this example. I mark this zone well, and there's no gap here because of this wick. It's from a wick here, and this wick touch our zone, which shows us this price has already mitigated, so price will not come back here. Okay, so let's look at the key points. Orders have been filled, as you can see, because since there's no gap, and orders has already filled. Okay, so reaction confirms institutional present. Okay, after mitigation, the order block is less reliable for the new trade, so no need of coming back again here. Maybe in future it might come back. Okay, so why these order blocks are important? Because it helps us to find high probability entry zone. Okay, and also it confirms liquidity grabs and institutional footbridge, and also it's used for stop loss and take profits placement. Okay, instead of yapping, let me shift to chart, and then I'll show you how this order block works. Okay, as you can see, my friends, let's look this example. Overall this chart is moving upward, but if you can see well down here, price break equal high. There's a break of structure. Let me copy this one, and then I'll show you. Okay, I can see there's a break of structure here. Okay, so price form break of structure, and this is a strong body. We mark candlestick before this strong move, and then we wait institutional to push this price down here, and then we enter our buy from above this zone, because again, if you can see, price has already swept liquidity below this wick. Okay, so no need of shaking, or no need of being fear. Okay, then you target maybe again the new equal high somewhere, or even above there. Okay, that's how we trade. And again, let's look at this example. As you can see, guys, again, this price break this equal high, as you can see, and then it form a strong momentum body. So what we need to do, we need to mark this candlestick before this strong move. Okay, then we wait institutional to push this price down here, and then we enter our buy from here, and then we target another equal high. Okay, let's look at example of invalid order block. Okay, as you can see here, this is a zone, there's no gap here. Actually, this is a strong move, but there's no gap here. Okay, so this called invalid order block. As you can see, someone will wait institutional to push this price to come here, and then maybe it might change character, and then already you entered your entry from here, but price will not respect this order block because it is invalid. It will not respect this zone. This zone become invalid order block. As you can see, price a little bit move up, but later it moved down and swept stop loss. Okay, so this is called invalid order block. Okay, let's look unmitigated order block. Okay, example of unmitigated order block. Okay, as you can see here, these are strong move candlestick. Okay, so this is called unmitigated order block because price did not fill that gap automatically. Okay, so price move up, okay, pull back again, but did not fill this gap automatically. Instead of filling this gap, it started moving up, and then let's say after some weeks, maybe 2 weeks, institutional push this price down and fill this gap. Okay, so this called unmitigated order block. Okay, so this is where you should enter your buy. Okay, then you target the next zone. It's simple as that when you understand different types of order block. Okay, this is example of mitigated order block. Okay, as you can see, there's a wick here. Okay, so price move down and then touch our box. Okay, so there's no gap, as you can see, so this become mitigated order block. So price, even if price will move down, price will not respect this zone. Okay, as you can see here, finally institutional push this price down here, but did not respect it. Okay, instead of reacting from this zone, it started moving down. Okay, that is mitigated order block. Okay, so when you see these types of zone, okay, these types of a candlestick, when candlestick form a wick, just know that that's called mitigated order block, and it will not respect your entry. Okay, it's simple as that, it's easy as that. Thank you very much, my friends, okay, for watching this video up to the end. Please, again and again, subscribe my YouTube channel. Right now we are 800 plus subscribers. At least by the end of this month, let's push up to 1000 subscribers. Okay, thank you very much, and have a blessed night. Okay, right now is 3:15 a.m. guys, and can you see, guys, I sacrifice myself and I make for you a good video. Why don't you support me? Just subscribe my YouTube channel. Okay, bye bye, good night.